Hello, welcome. It's another daily update video. As I've already mentioned, this week shouldn't contain anything too drastic, but I will try to cover what I can here and there. Today I will be going over Russell, but before that I wanted to note something quickly on Nasdaq and ES. So Nasdaq, as we know, yesterday being Tuesday, actually managed to tag into the weekly buy side imbalance. Let me remove this horizontal ray to make it clear. We are going to also remove that, and we can see that Nasdaq actually, okay, let's remove this, then we can draw it properly. So we did that. We've tagged into this weekly buy side imbalance, and we are actually rejecting away from it right now. And of course, you guys know that I'm looking for an internal to external range move to that buy side liquidity up here. Then going through that, of course, we have the all-time high residing up there, which is my final target. So I saw something interesting today on the hourly time frame when I'm observing the entire week's price action. I see that on Monday, let's enable this indicator. We can see here on Monday we had a bit of a consolidating price action, right? A bit of an indecisive market condition. It looked like a clear manipulation, and it looked like it wanted to distribute higher, but failed to pull through the distribution higher. We can see that's the Sunday opening price, or in other words, the new week opening gap that's there. So we chopped around the new week opening gap, and then yesterday being Tuesday, as the first of the month traded, we pushed lower, pushing lower into the gap, pushing lower into the weekly gap that we created. What I was saying that I found interesting today was the fact that E-mini S&P 500 also did the same, I believe. Let's actually go to the weekly chart to confirm this. Ignoring all the gray lines you see here on the left, we can see that it did exactly the same. We have a swing high, and if I have the gap there, we draw it out like that, and we can see price did trade into the weekly gap. The same idea, internal to external range liquidity. This time the external range liquidity just so happens to be the all-time high as well. Going back now down to that hourly time frame, what I found interesting is here, Tuesday, the low of the day was created there. Notice how today we ran the lows, right? In other words, we swept liquidity, right? We swept Tuesday's low, but on Nasdaq, inside of that PDRA, we did not sweep the lows. We failed to sweep Tuesday's low. To me, that is a clear SMT divergence, and I'm expecting this to hopefully be the low of the week. Let me not say probably. So we have an SMT with ES. I know I just went through the entirety of the last 4 minutes to describe what an SMT divergence is, but many people might not know, so I decided to cover it again from scratch. So yeah, that's an SMT divergence. Let's clear all these lines that are extremely unnecessary. And now that liquidity has been taken, if we were trading the model that I trade, right? If you are trading what I trade, which is to wait for price to have an SMT divergence inside of a high time frame PDRA, which it did in this case, the next thing is to look for time frame alignment, right? Because we were dealing with a weekly PDRA, my alignment would be on the 4-hour. So on the 4-hour, I have two entry mechanisms. I can use an order block, which we actually got already here. notice how the body of this line, basically, which is the body of this last down close candle, got we closed above it here, so literally the next candle would have been my entry. So this would have been my entry, the opening of the next candle, and the stop loss is typically at the bottom of the order block, but for the sake of safety, I guess I'll just put it at the swing low and the TP being the all-time high. This would have been my model, my entry. But if I don't get this, then I'd wait for a BC to be formed, a fair value gap to be formed, right? If I wanted to be sure, I'd wait for a second fair value gap to be formed before entering for the all-time high in this case. So I wouldn't just wait for this fair value gap here. I would actually wait for the confirmation one up here before taking the trade. I know it might look as if the risk reward is not too nice, but at that point you would probably have a swing low where you could place your stop loss that's reasonable, and at that point you could probably even aim for a 2-hour trade above the all-time high, maybe targeting something like a psychological level or a round number like 5860 for example, or 5900 on the dot, or even 6000 big figure, something like that. So here we have Nasdaq basically doing the same thing. There's the other block. I don't know if we've tagged, I don't think we've tagged the other block though. Yeah, we haven't tagged it. See, didn't tag it there. So yeah, but if I was taking a trade, I would wait for it to get tagged, and then I'll get triggered with my stop loss being at the low that wouldn't break the SMT. So it would look something like that. Stop loss over there, TP over there, the external range liquidity. This is supposed to be like here, but you can see we haven't gotten tagged in yet. So yeah, again, order block is not really my favorite entry. I prefer a double fair value gap confirmation. So yeah, I would rather take something like that, especially considering that we have this massive imbalance here and we have NFP on Friday. I would rather wait for this imbalance to be disrespected, for us to be trading above the new week opening gap. Probably by then we would have literally the second fair value gap that we needed anyway to continue trading price higher. Remember, the all-time high is still a distance away, so from here all the way to that point is still room for you to make money, so there's no need to rush anything. The last thing I wanted to cover was Russell. I wanted to expand on what we talked about yesterday. On the daily time frame, I did say that I was looking for a double purge with this specific candle, right? We took the highs, we took the lows. We failed to close above the highs. We failed to close below the lows yesterday, specifically yesterday. Notice right there, we closed above this the swing low right here. I know today opened making it seem as if we are closing below this candle, but in reality we actually just opened with a new day opening gap that was wide enough for price to be at this point. So I'm not going to count that in because this is a new day opening gap. In a way you could say that the new day opening gap could be signifying that maybe price is bearish or something. Let me put it out to show what it looks like. Looks like that, the blue line, the blue shaded area. It's the new day opening gap. So now, if you watched my previous video, you would know that the confirmation that I'm looking for is a double fair value gap here as well. We just created one. Inside of this, we swept liquidity, which is cool to see. I did also mention I don't mind us sweeping as long as we don't close below this low. And right now we have about 45 minutes, just like yesterday, for this candle, for the daily candle to close. So yeah, right now I would like to see a push up from here and then a second hourly fair value gap, because we're working with a daily PD array. So we got one already, but I wouldn't enter this. I would now wait for the second one to form somewhere here, maybe, for example, and I'd rather take this one because this gives me the indication that price is likely going to now start being bullish. So yeah, that's what I'm expecting on Russell. Of course, we have those targets up there. Yeah, that's all I have for now. I know it's a little bit of a longer one, but basically the same concept, and I just refreshed on SMT divergences. Again, a quick crash course for those that don't know about it. Yeah, stay safe.